Mr. Speaker, with your permission, can I answer questions 3 to 20, as well as all other PQs related to the bankruptcy of the trading platform FTX together?
Please do.
Sir, before I address these questions, let me reiterate the government's and MAS's overall approach to digital assets. We have drawn a sharp distinction between growing an innovative and responsible digital asset ecosystem and speculation in cryptocurrency, which we actively discourage for the retail public. We encourage and support innovation in digital assets because we see potential for new technologies to transform cross-border payments, trade, and settlement, as well as capital market activities. Early forecasts have proven too optimistic, and it is still not clear that blockchain technology will develop beyond limited use cases into a game changer for a wide range of industries. And this is why we are piloting specific use cases to test the possibilities in the financial sector. Cryptocurrencies are a different matter. They are purely speculative as an investment asset and have no intrinsic value. That is why MAS has consistently warned the retail public not to deal with them. Members have raised two broad issues in their questions. First, on regulatory measures and the impact of the FTX bankruptcy on our financial system, and second, on the investments made by Temasek in FTX itself. Let me start with the first issue. The collapse of FTX and other major cryptocurrency platforms should bring about much-needed rationalization in the cryptocurrency space. The repercussions on the cryptocurrency ecosystem globally are still unfolding, and we are watching this. We do not have data on the number of Singapore retail users of FTX, just as for other platforms that are not licensed here and do not operate in Singapore. Unfortunately, those who invested in cryptocurrencies through FTX's global platform would have lost money. As for Singapore's broader financial system and economy, our assessment is that spillovers from the FTX collapse will be very limited. MAS's surveillance shows that key financial institutions in Singapore have insignificant exposures to cryptocurrency and crypto players. MAS has explained its approach to regulating financial institutions providing cryptocurrency services, also known as digital payment token or DPT service providers in Singapore. Such DPT service providers are regulated by MAS to address money laundering, terrorist financing, and technology risk. Whether the DPT service providers can address these risks robustly is a key consideration in licensing them to operate in Singapore. Importantly, DPT service providers are currently not regulated for safety and soundness, nor for investor protection. And this is also the prevailing approach in most jurisdictions. MAS has been consistently warning since 2017 that dealing in cryptocurrencies is hazardous, and recent events have underscored these hazards. MAS has also, in its recent statements, explained the role of MAS's Investor Alert List, or the IAL, and why FTX was not listed on it. And let me set this out again. The IAL serves a very specific purpose: to warn the public of entities that may be wrongly perceived as being regulated by MAS, especially those who solicit Singapore customers without the requisite license. MAS did not have reason to list FTX on the IAL because there was no evidence that it was soliciting users in Singapore. This is unlike Binance, which was placed on the IAL for actively soliciting users in Singapore without a valid license and is being investigated presently by CAD for possible violation of the Payment Services Act. This does not mean that all entities which are not listed on the IAL are safe to deal with. MAS cannot possibly provide an exhaustive list of all the unsafe or unlicensed entities that exist in the world. Going forward, MAS plans to introduce some basic investor protection measures for DPT service providers which are licensed in Singapore. MAS recently published a consultation paper which includes proposals that DPT service providers, amongst other things, administer a risk awareness test to evaluate if potential retail customers are suitable for accessing cryptocurrency services, segregate customers' assets from their own assets so as to prevent lending out of customers' money and protect customers' interests should the service provider fail, and refrain from operating a trading platform while simultaneously taking proprietary positions for their own account to prevent conflicts of interest. After receiving industry and public feedback, MAS will finalize the proposals and implement appropriate regulatory measures. Let me emphasize that even with these proposed measures, MAS will not be able to prevent DPT service providers from failing or customers from suffering losses. Cryptocurrency platforms can collapse due to fraud, unsustainable business models, or excessive risk-taking. FTX is not the first cryptocurrency platform to collapse, nor will it be the last. Further, even if a cryptocurrency platform is well managed, cryptocurrencies themselves, as I mentioned earlier, are highly volatile and have no intrinsic value. Those who trade in cryptocurrencies must be prepared to lose all their value. No amount of regulation can remove this risk. Next, let me address the Temasek investment in FTX and the government's stance on our investment entities and statutory board's exposure to digital assets and cryptocurrencies. The government does not prescribe guidelines on the allocation of specific assets or asset classes, whether for cryptocurrencies or other assets. This applies to our statutory boards, as well as our 3 investment entities managing our whole of government assets, namely Temasek, GIC, and MAS. Statutory boards have specific mandates and functions. They are not investment entities, but they have the flexibility to invest their surpluses. And they typically do this through external fund managers under the oversight of their respective supervising boards and ministries. And we expect statutory boards to make prudent investment decisions and not be distracted from their core functions. For our investment entities, the government sets out its risk tolerance limits, monitors for appropriate diversification in asset classes, sectors, and geographies, and ensures that downside risks are not excessive. In this spirit, the government does not prescribe an exclusion list for specific assets, but we expect the entities to incorporate environmental, social, and governance, or ESG considerations into their investment processes. And they should do so in a way that best suits their investment mandates and preserves their reputation with global partners and markets. Ultimately, the government holds the boards and management teams responsible for formulating investment strategies in accordance with the government's overall risk tolerance. One of the areas Temasek and GIC's private equity arm operate in is new technology and early-stage companies. There will always be new waves of innovation and technology that seek to disrupt the status quo. Some waves will turn out to be hype and fizzle out over time. Other technologies will prove revolutionary and transformational, like the internet. But even with genuinely revolutionary technology, there are risks. Many startups will fail, while a few will prove successful and grow into industry leaders like Tencent or BioNTech. The skill of venture capitalists lies in discerning the promising projects and backing them. Risk-taking is an essential part of such investments. As long-term investors, our investment entities have to operate in the space. They do their best due diligence based on the information available. Having made the investments, they monitor the investee companies closely, but no amount of due diligence and monitoring can eliminate the risk altogether. Insofar as blockchain technology is concerned, Temasek and GIC have some investments in the digital asset space, but they have no direct exposure to cryptocurrencies. It is disappointing when there is a loss by our investment entities, as in the case of Temasek's investment in FTX. Even more so because the loss arose from what turned out to be a very badly managed company and from possible fraud and mishandling of customer funds. The fact that other leading global institutional investors like BlackRock and Sequoia Capital also invested in FTX does not mitigate this. What happened with FTX, therefore, has not only caused financial loss to Temasek, but also reputational damage. Temasek recognizes this and has issued a comprehensive statement to explain its due diligence process and the circumstances leading to its investment in FTX. Temasek has also initiated an internal review by an independent team to study and improve its processes and to draw lessons for the future. I am confident that the Temasek board and management team will learn and improve from this experience. At the same time, we should see this FTX loss in the broader context of Temasek's performance in early-stage investments. After writing off the FTX investment, Temasek's early-stage portfolio, as at March this year, has generated an internal rate of return in the mid-teens over the last decade, better than industry averages. The FTX loss will also not impact the NIRC, as the NIRC is tied to the overall expected long-term returns of our investment entities and not to individual investments. Following the FTX collapse, some members have suggested implementing more guidelines and safeguards over the investments made by Temasek and GIC. That is understandable, but the governance structures in place today for Temasek and GIC are already more extensive than those of a typical company. Temasek, which is an investment holding company, is audited by commercial auditors. GIC, which manages public funds, is audited by the Auditor General. As fifth scheduled entities, both Temasek and GIC are subject to the President's oversight of their budgets and key appointments. In Parliament, if there are any questions by members about the performance of the entities, MOF will respond to them as we are doing now. There is therefore no need for additional audit requirements or parliamentary committees. Instead, we should insulate the boards from political pressures. Let them do their work, carry out their responsibilities, and fulfill their investment mandates commercially and professionally. The investment entities themselves publish their performance with respect to broad market indices. In Temasek's case, the MSCI equities indices, and in GIC's case, the reference portfolio comprising 65% global equities and 35% global bonds. These market indices and data from reputable global investment funds serve as useful reference. But ultimately, the government evaluates the entities based on their long-term performance, and their track records show that they have performed creditably even in challenging environments. Sir, in conclusion, the FTX loss is disappointing and is being taken seriously. But the occurrence of investment losses does not in itself imply that the governance system is not working. Rather, this is the nature of investment and risk-taking. What is important is that our investment entities take lessons from each failure and success and continue to take well-judged risk in order to achieve good overall returns in the long term. In this way, we can continue to add to our national reserves and provide a stable income stream to fund government programs for a long time to come.